Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
How would you feel if you put 100,000 ringgit into an investment 10 years ago, thinking that you'll have 300,000 today, only to find out that it's all gone? Every cent of it. You have just become the victim of a Ponzi scheme, and the person you trusted with your money, a scammer. What are you going to do now? Welcome back to WangHiro. Today, we've put the spotlight on one of the easiest ways to lose a large sum of money: investment scams. The type of investment scams out there, why we fall for them, and how can we avoid them. So John, why do we keep falling for investment scams?
4 reasons. I'm going to be straight to the point. Greed, not knowing any better, okay, naiveness or lack of financial literacy. Trust. You actually trust someone else that gave you that opportunity, and then you didn't even vet your own. And last but not least is FOMO. I think the biggest one for me I've seen so far is actually FOMO. So FOMO is fear of missing out. Because they will like tell you, it's like, when we go into the supermarket, we always fall for sales most of the time. Oh, it's 50% off. Oh, it's 80%. You may not even need the product, but majority of people still fall for it. Another one, I was at a Starbucks meeting some prospects last week. They have this new upsize scheme.
No.
If you buy a juice, you don't buy the coffee, right? You buy the juice, okay? They actually said that, hey, if you buy the juice, which is only like $8 or $9, they said that, 13 to 15. They said that, hey, it's actually even better that you buy together with the nuts. They have a Starbucks nuts, okay? The nuts cost $8. The juice costs 15 or 16. And they actually say, yeah, it's going to be cheaper because this is $8. And that's like, now I want you to think, a bag of Lay's, or a bag of Tong Garden, right? The nuts, right? Is it going to be like $10 or $8 or not? I don't think it's going to be that expensive.
No. I think I remember the size of the nuts. I mean, the bag wasn't big.
Very small. It's like probably 300 grams or less.
300 grams of nuts.
Yeah. No. I think less. Definitely less. Maybe 50, 60 grams. Yeah.
I
know
think
it's like your normal crop pot size. The small crop pot size.
Less than half of that, maybe. Yeah, not going to be 8, less than half.
Hey, you buy Tong Garden, it may be 10, 15 ringgit.
That's the big
bag.
One.
Yeah. So again, I'm not saying it's a scam for Starbucks. Don't get me wrong. I'm saying that people try to use this as a tactic because they don't want you to think. Yeah, you're not using your logical brain. You're just like, go with the flow, spontaneous kind of decision, small ticket items, and that's it.
So it's a social pressure as well sometimes.
Precisely. They are all their staff are actually trained. Like if you're a shareholder of Starbucks, you should be giving the 2 thumbs up because that's like getting more money. And also the prepaid cards, the Starbucks prepaid cards. Yeah. So thumbs up if you're an investor, and also thumbs up that the staff are well trained. But again, these are examples of how social pressure, emotions get into play.
Yeah, I think that the people who come up with these investment scams also like use this, but in a much more evil way.
Yeah.
Right. So Starbucks, I mean, it's just a marketing thing, right? You're not.
Correct.
You're still getting a nut, you're still getting a drink, but in the case of like investment scams, you're getting nothing at all.
Yeah.
Right? Maybe a lot of disappointment, anguish, right? All these things come into play. So obviously we understand that there's a lot of money to be made through investment scams. That's why they spend so much money, just devising the plan itself to make it convincing, right? So one of the most common ones that people fall for and is the scheme around is called the Ponzi scheme.
Yep.
Right? The scheme is named after Charles Ponzi. He created the first ever Ponzi scheme in 1920. That's almost 100 years ago.
That's right.
It's still in use today,
Yeah. It just comes in different shapes and forms. It's either using a crypto and to tell you some very interesting, very technologically advanced kind of narrative, but eventually, most of it, if you see like the Luna thing, it was actually a Ponzi, right?
Oh,
Yeah, Luna was actually a Ponzi. Yeah, right. And you see, the struggle for most people is that the emotions come into play. I have been like, emotionally, what do you call it? Emotionally attracted to some of these before because of returns. And it's not easy to trade. It's like over years you make the mistakes, and then you get smarter and smarter, hopefully, right? Hopefully you get smarter and smarter. And that's why I mean I suggested that we did this episode with you, Louis, because you and I definitely had friends or relatives that have come across some of these. But at the same time, how do we, like, instead of just waiting for it to happen and tell the story afterwards, our purpose of this episode is try to, like, hey, what are the telltale signs of it? What are the structures in which is very likely a Ponzi, and how can you like prevent yourself from falling for it actually? So how does a Ponzi scheme actually work? In any shape and form, most of it work like this. The first batch of investors are actually promised a certain kind of return. Okay, maybe it ranges from maybe 1% or 2% a month, which is still actually, people think 1-2% only but it's compounding every month, or per the year, right? Or they even give you even more enticing or higher enticing, 8%, right? They'll tell you all sorts of narrative that this thing can happen or logically can happen. And then you, on the other hand, put money. Usually they scam who, they scam conservative guys. Because the conservative guys, they look at the returns in an FD or whatever. They say, oh my God, when am I going to ever get rich? Or when am I going to hit my financial freedom because of this conservatism? And they play along this. It's very safe, capital protected. Now, obviously, in hindsight, those are all lies, right? But the new investors will actually subsidize the old investors. So you get a pool of original investors, you pay them money, pay them a certain interest rate, a return, a yield, whatever you call it. And then with attracting new investors, these investors' money is actually used to pay the old investors. You get what I mean? Yeah. So it's like a musical chair. The musical chair stops when the new investors stop coming in. And when they stop coming in, the old investors don't get paid. That's when the pyramid, that's why it's called a pyramid scheme. It's like the guys at the top, they get paid because they're early. But the guys at the bottom, if you don't come in and fill the stack, right? That's where it happens.
Yeah, I think that one very interesting thing that I noticed about how they sell these things to people who are, you mentioned conservative people, is that they want to present the opportunity as like a once in a lifetime thing.
Correct.
Right? Like, oh, you can get it now because we just started.
Yes, you're early.
You're early, or like, oh, we discovered something. Don't tell the world. It's a secret.
Yes.
But only you know. And then like, okay, so for this investment, you can get what, and for Ponzi schemes specifically, why they can run for so long as there are new deposits is because the old depositors can get their money.
Correct.
And that itself will dissuade others from saying, hey, my money stuck there, is a scam, right? Immediately, right? This can go on for 10, 20 years without anyone noticing, as long as I can withdraw the money.
Yeah.
Right? So exactly. As long as the promised returns are realized, right? In my hands, I have like, maybe if I'm promised like a 2% return, and then next year I withdraw, it's all there. Capital plus the interest is there. Then I'll tell my friends, look, I can withdraw. And then the friend will be convinced to join, right? So then we'll slowly like escalate grow the
euphoria, the enthusiasm will always be there, because they will keep on saying, hey, you see, I made how much this month? Hey, I made how much last month? And
I can't even name how many of my Facebook friends actually went through Ponzi schemes like right in front of my eyes. Because they would post, They would post.
Yes.
This today I have this much money, tomorrow, like months later, she's like, one person actually like even quit her job
because she
became so embedded in the Ponzi scheme, she even worked for them.
Wow.
So after that, obviously the whole Ponzi scheme like collapsed, and she went back to her job lor, but with much less money lah.
Understand.
She really learned her lesson. She was very proud of herself. She was like, oh, it was like a goal-driven one, that particular. I think a lot of them are goal-driven.
Either goal-driven or forex-driven.
Yeah.
Yeah, usually these two are crypto-driven. Yeah. Which
because people understand gold, right? See, going back to the conservative guys.
Yes.
Right?
Yes. Yeah.
So,
that's the struggle, actually, Louis, because they know how to play the strings.
Yeah, correct. Because especially Asian people we like gold, so now this is how we're gonna invest the gold in a way that you will get these returns. Yeah, to your mind it makes sense, it's logical. Like I had friends who were so convinced about Ponzi scheme, and they said, oh, Louis, you're gonna get 2% every month. I'm like, compound that over a year and tell me how much you'll get. And they were like, it's actually not that high, And I'm like, have you compared it to realistic market gains?
Yes.
And then they just totally zoned me out at that point. And after quiet, then after that I knew that they had lost a lot of money. I went for thousands of ringgit into
because the shame will come out. They don't want to talk about it because the shame will come out already.
Because they tried to convince me because of the referral fee, man. If you it's even easier with these like gold or crypto driven schemes, right? It's because instead of them paying you money, right, they can just give you more gold in the account.
Yes.
Unrealized, right? Just paper gold.
Unrealized, but when you want to withdraw the physical gold, that's a question mark.
Cannot.
Yeah.
So I think one of the most famous ones in modern day history is the Ponzi scheme by the financier Bernie Madoff. Okay, so if you're into this kind of like financial fraud, you might have seen the Netflix series covering this case. I personally really love that series. I watched it like a few times. I think John as well. With this, so he was the mastermind behind a decades-long Ponzi scheme, which was estimated to have caught about 4,800 victims of over $64.8 billion. Over so many years, decades, and he called his friends, family, even his wife and kids didn't know about it.
Correct.
In the end, he was sentenced to 150 years in prison in 2009. So the question is, how did this fraud could go on for so long, John? Why?
Actually, you mentioned some of these points earlier, but I'm going to reiterate or reinforce them. One is they did it in secrecy. They said that they were very very specific Jewish families, which are usually quite rich. They actually only did marketing through word of mouth. That means referrals. Okay. They always mention that this is the next best thing. They don't go out and they didn't go out publicly to market. Actually, all their marketing was done by friends and family, through word of mouth, in the golf clubs, and then everyone just said, "Hey, I'm making this much money off." So literally, even if Bernie, I can't speak on behalf of Bernie though. Even if Bernie wanted to stop, money was just pouring in because of the kind of returns that he was getting for his shareholders, so-called, right? I think he went on for close to 15 years, 13 or 15 years, I can't remember specifically. But also, it's because of this secrecy that he tried to inculcate in all of his referrals. He just said, please don't tell anyone, don't disclose this, And some of his these are people, they are not dumb people, Louis. These are people who like multi-million, multi-hundreds of millions net worth, financial professionals, even some of them. And yet they still got conned for a few reasons. Okay, one, someone alerted the SEC actually. So I try not to spoil the story for those who are going to watch the Netflix, but I have to tell this part because to understand the scheme, right? So he actually had a legitimate firm upstairs where the two sons and the wife was partially involved. But there was another part of the business, which was the part where his sons never even went to the office, which is just downstairs, right? And one of the reasons why I felt that he could run it so long was it was a very elaborate scheme. When I say elaborate scheme was this, the SEC got notified, they came to check. They had to get a computer programmer. The computer programmer was key to his entire scheme. They had to get the computer programmer to actually program all the trades as if they were real.
Wow.
All right. So that's why this guy called Frank Di Pascali and also the two programmers, actually in episode, there were this three-part series. So the last episode, the two programmers actually like demanded a little bit more from Madoff because he saw how much Madoff, they both saw how much Madoff was making. But it was elaborate. It's not just like just moving sheets around, but they had to program it in such a way that as if there was a portfolio. And that's why, like, when SEC came to see, they saw, oh, there's trades. Okay. Then another one of the investors actually said, hey, they were journalists actually, when the first surfaced, the journalists actually said that, hey, this could potentially be a scam. One of these investors, a big-time investor, went to see Madoff and said, hey, what's this? Where's my portfolio? Show me the portfolio. And Bernie had to get Frank Di Pascali to actually come up with the trades. They bought Microsoft, sold, bought at this date, sold at this date, all that kind of thing. So actually, the programmers were invaluable to him because they had to create like almost like a trail of all these trades, fictitious trades, and that actually put away the SEC investigation, put off the SEC investigation 2 times because it made it look like a legitimate one.
Wow.
But the scheme, if you are a fund manager, actually the way to double check was very simple. If your fund is so big, you're talking about 60 billion, right? You need to buy and sell it through a broker. Okay. Now, if you yourself, even if you have the broking license, you may not have the quantity of shares necessary to buy enough for your funds. So most likely, in the financial scheme of things, JP Morgan, Morgan Stanley, all these guys who are prime brokers would have to deal with you. But in Madoff's case, no one actually brokered the share sale to him or bought the shares. So a lot of these JP Morgan guys, even though they didn't get too involved in it, but they were suspicious because, hey, if you're buying Microsoft, 1 billion worth of Microsoft, it must have passed through one of these networks of brokers. It didn't. So that means the money never got through. When you buy and sell share, you have to go through a broker, right? Even online, you talk about even Futu, Mumu, Robinhood, whatever. You would have to go through a broker. But the brokers, for that kind of size, they say, hey, no, we don't see the movement of the shares. You see what I mean?
What stopped people from digging further than just
this kind of information usually is not available for retail guys. Institutional, yes. For the retail guys, usually you don't get access to this kind of information. Yeah, so that's why I think in Madoff's case, his level of the fraud was one level deeper than just a normal than your normal. So they actually had fraudulent trade in the portfolio. So you cannot, your math must tally takkanlah you buy 1 million but you sell 500 million and then at the bottom becomes 0. It must tally, So it's quite an elaborate mathematical scheme also, You have to balance it out, you see, all these trades. Yeah,
but I mean with historical information, I guess it's much easier like.
No, and okay, I give you an example. If you are such a big investor of, let's say, Microsoft, right? You own like 10 billion or 2 billion worth of Microsoft shares, right? You would have appeared on the top 30 shareholder of your fund.
True.
But no one went to check.
Wow. I mean, it's just like I think what's interesting about this case in particular, and I think compared to the rest, is because how sophisticated his investors were.
Correct.
Right. They were like actual like financiers, people involved as well. People who have like their own family offices.
Correct.
So to even get to that point of like, and some deposits were like worth tens of millions.
Yes. Yeah. Easily tens of millions.
Yeah, easily tens of like putting into his fund, and then like it's actually nothing. So I don't know, like why is it actually like, did it actually make more money than if he could just invest everything?
It would have been tough because you see, no matter how we say that you are a great investor or you can time the market properly and all that, right? Actually, the only way to make money in the stock market is actually when the market is volatile. If the market is never volatile, you will not be able to buy at discounts to the market, or you will never be able to sell at a profit when it's like exuberant. And in Madoff's case, he was giving consistent high returns. And I think that actually caused a lot of people to forget, or they want the fear of them being invested in a bad market. That was a very painful psychological barrier that pushed them towards Madoff, because they said, I don't promise you extravagant return. I promise you like 3%, 4% a month, very steady kind of thing. And that was actually ingrained to like, they turn off the safety lectures, put it this way, because they don't want to get in their portfolio in the red during volatile market. Obviously, when someone is offering slow and steady kind of, but like astronomical returns, for them it's like, wow, okay, it's safe. They straight away turn on it. It's safe, it's steady. I'm getting my money, that kind of thing. But no way that if you're invested in equities, you will be able to escape the brunt of a bear market. The cycles will happen. It's just a matter of when only. And I think that's where if you really study investors, they don't mind taking the hit because they know it's a blip over the long run. I don't know whether I'm making sense to you, Louis.
Yeah. I think what's more interesting to me is like the psychology that you mentioned.
Yes.
Right. So because of our bias towards wanting things to appear safe.
Correct.
We kind of like push unrealistic things into our modes of safety.
Correct.
And then we actually charter into unsafe territories instead.
Precisely.
So that's kind of like I think that's the key to how these scams operate. Like every I think the gold scam, I've seen a few actually very close friends of mine also invested in it, and what they even have like all those apps, right?
Yeah, correct.
To track the pricing, you can even buy and sell. In fact, you're buying and selling nothing lah, but you buy, sell, whatever. And then they create all of these things to make it so legitimate, right? They even have like dinners. Sometimes they work with well-known people.
Yep.
In a specific zone, right? So after some time, the scheme like collapses and everyone disappears.
Yes.
It's always the case. Like everything looks fine, and then one day it's just gone, and your money's just gone because where are they now? I don't know. Yeah. Some years ago, a friend of mine also quite wealthy, and then she suddenly like contacted me to tell me, like now you can invest in this gold fund. It's like the minimum investment is $4,500.
Wow.
And she invested 20,000.
90.
20,000 US dollars into it, and because she was very wealthy, so for her she's like
pocket money lah.
Yeah. So she was telling me, I just put 20,000 to try. If it's a scam, never mind.
There's probably someone's life savings there.
Correct. So like, but at least I was like, different level. So maybe to her that 20K is only 5 ringgit or something.
Yeah.
Because to her she was putting in a safe amount, right? So, but yeah, imagine the amount of money that these scammers got right during this period of time.
That's right.
Yeah.
About the point of safe, I think this is where a lot of these scammers also know where to prey on. They will imply that it's a safe asset, or they'll find assets that is deemed safe, like gold, like all this kind of even forex, like even like the one that I wanted to highlight was actually bonds. So you see, right, bonds. Remember the collapse of Credit Suisse, the AT1 bonds, the one that we covered in the previous episode, right?
Yeah.
These were bonds that were paying like 9%, 7%. So you see, bonds, right? Bonds is quite funny, right? Long to short of it, the higher your yield on the bond or your coupon, actually the more junk it is. So only junk bonds pay double-digit territory because the risk of default is so high. So that's why the yield has to be high. So if you get a AAA grade bond, a very safe bond, you're likely to get 3-4% only. Like US government treasuries, right? You're not going to get 10%, 20%, right? On those kind of, unless interest rates go super high lah. Okay, then different story lah. But in a normal environment, the higher the grade or the safer the bond is, the lesser the interest payments actually, the lesser the coupons actually. So people will tell you the narrative, bond is very safe ma. Oh, every year they have to pay you. What if they default? You see?
So
like this case, the scam, what if they default? They just run away. That's it. You know, yes, you're being paid 8% a month, 9% a month, but what if they default? Bye-bye.
And you can't time when that will happen as well, right?
Most people will claim they do lah. They say, "Oh, I'm early. Don't worry, I will get out."
Correct. Like sometimes, like I've literally seen that scheme around for 5 years.
Yeah.
My friend comes to me and she's like, "Oh, like I know of this fund. Don't tell anyone. Blah 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 blah." I'm like, "What's the name?" I was like, "This has been here since 5 years ago. Like you're not early." Yes, they still put their money in, and within 1 month, the company gone. 1 month. 1 month after he told me, I told him not to put his money in, but he thought I was just dumb or being too conservative. And you can see the toxic mentality that
correct
people who are invested already have, because that's what the marketing wants to tell you. Oh, they even have a way to like ingrain into the buyers, your friends and family might tell you that blah 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 is a bad, because they don't understand what you understand. You're different.
Yeah, you're different. You're smarter than all of them.
Yeah, they want you to feel special.
Correct.
They make you feel special, smarter. And for a while, I think there was like even this Seaweed scam.
Huh? Oh, this one I don't know. Never heard. Wow, even Seaweed also got scam.
yeah, Seaweed plantation. Have you heard of that?
No.
It will say, invest in a seaweed plantation. I'm not saying all seaweed plantation investments are not legitimate, but some are like, because they are legitimate ones, that's why these are the illegitimate ones.
The
copycat, but not real. Okay, but they will appear real. Then they will like give pictures saying, here's our fund, blah blah blah. Then they will even like put in their schedule when is the site visit, and then you will even like drive there, you will even be taken there, and then upon arrival, somewhere close by, they will suddenly have someone come out and say, "Oh, cannot go in because the road is damaged, or flooded. The road is flooded. We cannot go in. Maybe we have to rearrange the day." But they will never come.
Yeah.
So then, because you have arrived at the front, in fact, I don't think there's anything behind lah, nothing. Then, because you have already arrived, they'll check it off as a site visit already, whether you've seen or not seen.
And they'll take a photo of you during the journey, but not on the
correct.
So, testimonial.
Correct. So they will say, "Oh, we brought you guys these people." Then these like documents, will then become proof for the next batch of like investors into this scheme. It's not only Seaweed. I think there's a lot of plantation schemes like that as well.
My goodness, wow, this is new to me, man.
It's very scary because of all the elements, like whether it's like this Bernie Madoff's huge financial scheme, or like little schemes like that, right? That one people may be losing about 8 to 30,000, not much, but it still has the same elements.
Correct.
As long as it is a Ponzi scheme, right?
Yeah.
Okay. So I think we now like take a zoom into the next kind of scandal, which is like financial scandals. And why we want to also bring up the financial scandals is because on WangHiro, we think that investing is one way for you, a very important part of your journey to growing your wealth, right? So it's very important for you to understand what companies are also doing. And if you are an investor of these companies or companies in general, that's some things that you might want to be aware of. Okay, so one of the big explosions in the world of investing is Wirecard. Some years ago, was it some not too long
just quite
ago,
recently, probably 1-2 years ago, only.
2 years, 2 years, 2 years ago, Wirecard actually was found for like a large number of like frauds. In fact, like in e-commerce, right? I actually like was looking at Wirecard as like a payment processor for a period of time.
Okay.
And then immediately some months later, I was like, wow, I mean, luckily I didn't touch it.
I didn't pay for it or
Correct.
didn't
I was like, wow,
subscribe.
that's actually, like because I was like working with this European client. Right, so I wanted to like review this and help them integrate it, etc. Seem legit. Everything, if you look at the website, everything look normal. So many customers, everything, and then, whoa, when it happened, I'm like, oh, okay, there are a lot of things that we actually don't know. So maybe John, you can explain to us exactly what happened.
Okay, I wouldn't go in through the nitty gritty and into the weeds, but long to short, the sales was fraudulent. The cash was fraudulent. Everything else, almost everything was fraudulent. So they did not actually really even have a business per se, right? So if you look at their sales, they were suspicious client buying and selling from each other. Okay,
But was it then a money laundering thing?
That has never been proven, to be honest, whether it's money laundering. Okay, but they had a lot of Russian intelligence guys. Okay, I shouldn't say Russian intelligence. There were guys that were linked to the Russian intelligence in the Wirecard team as well. So that's where I think what really brought down a Wirecard was the smoking gun was actually a deposit of 2 billion that Wirecard claimed to be its cash on equivalent that was sitting on the balance sheet. But that money was actually non-existent. And it was actually put in a Philippines bank where they are a German listed company. So you find it very, very strange, right? It's like you and I, let's say we own $1 billion company now, Louis. Let's say one day we own $1 billion company.
Yeah, it will happen.
Right? Then the cash and equivalent that we have on our balance sheet, we actually kept it in Papua New Guinea. We have no business in Papua New Guinea. You get what I mean? Yeah. Then it's like, why? And actually, if you look logically, it's because regulations are slightly more lax there, especially financial regulation. That's the reason why some companies they go to British Virgin Islands, the Cayman Islands.
That's a bit of the FTX.
Yep. Okay, so because less regulatory oversight, you don't have to disclose. Actually, in Malaysia, our regulatory oversight is actually quite good. To be honest. It is quite good. There's a lot of reporting.
Yes.
Yeah, for a client, very leceh lah. Because you have to declare, like, there was a time when I was withdrawing 200,000 one shot, and the counter staff and the manager, the branch, was literally demanding me to disclose more things. And I was in a rush. I just like brushed them off and I walked away. So you just imagine it's my own money. And I have to declare where's my source of funds. Actually, it's very clearly shown it was from my brokerage account, all that kind of thing, right?
But it's kind of like, it's always like that, Like I think whenever I receive a Google AdSense payout, they also ask me for the source.
Yeah.
And it's not a large amount, like hundreds of dollars only.
Yeah. It's like tens of thousands already. They already start asking you, right? Yeah. So I think for the Wirecard case, if I were to simplify, even if you just read the financial statements, you wouldn't be able to pick up because it wasn't easy. I think the only way you could have avoided, I mean, now with the benefit of hindsight, was actually only a very, very skilled financial journalist or an investor would be able to pick it up. Wow. And what I find sad is because a lot of pension funds in Germany was actually in Wirecard because it was an index component of the German stock exchange. Yeah, and even the German government was supporting it when Financial Times was reported, right? The German government was protecting it. So can you imagine if you're a retail investor, don't know how to analyze accounts, don't know how to do like forensic accounting kind of analysis, it will be a struggle for you to actually like pick it up.
So I think the lesson here is to diversify your portfolio.
Yeah. Yes.
Because you don't know, right? What the pension funds are investing in. For us, EPF.
Yes.
Not to discredit EPF, but we don't know because companies can intentionally hide it's not the fault of like the pension funds or
Correct,
if
correct.
it happens to EPF, it's not EPF's fault because these companies are doing a lot of things intentionally to make sure that they don't get found out easily.
Yeah.
And then when it hits, then everyone's affected.
Yeah,
There's nothing
even
that we can do.
even Temasek invested in FTX. Would they have known? I don't think so. It's not that easy to right. Yeah.
No,
So
it's like you can't know everything. So
right.
perhaps for us the lesson is to diversify. We trust them that they do their due diligence, but even then you don't know what you don't know.
Correct.
Diversify in investing.
Yeah.
Okay, so the next one that we want to talk about is related to investing in a company in the public market.
Correct.
Like we have a series called Stock Investing from Zero, where we teach new investors what to look out for. So I think maybe we should add this to
definitely.
Is it a scam, right?
Yeah.
Is it a scam or is it something which other things that they're doing that we should be suspicious about, right?
Yeah.
So the case that we want to talk about now is the Luckin one.
Yeah.
Okay, it's still publicly listed today, but some time ago, were they convicted of the fraud?
They were actually what brought it to light was actually short sellers. Short sellers. And I really like this. It's actually public information. This short seller actually published a very long 100-page report. And for them to, you see the beauty about short sellers they have to be even more convicted of their idea because it's very expensive to short sell because you are actually borrowing shares, And because you don't own you're virtually borrowing shares that you sell at a cheaper price, then you make the money, That's how you short. But for a long seller, your holding cost or opportunity cost does not rise because the moment you buy and you wait for it to go up, in between there's no extra cost for holding. But for a short seller, when you actually put a short position, the longer it gets for the price to fall, actually is more expensive. And the higher the stock price goes, they actually have to they actually get a short squeeze. So I'm not going to explain short selling here, but long to short, for you to be a short seller, you have to be even more convinced, which means even more research. These guys actually paid like tens of thousands of people to actually sit in Luckin Coffee and to count the number of coffee cups being sold on a branch level because they were suspicious. Okay. Secondly, they went to pay these buyers of coffee to get the receipt and to do an aggregated sampling to see whether the numbers per store were actually inflated. So can you imagine, right? These short sellers took out a lot of effort to make sure that it was kind of a fraud. Yeah. And true enough, the CEO, the CFO was actually accused. I don't know whether they're convicted, but they were certainly accused by the what do you call it? By the authorities, by a lot of their investors as well about the fraud. And I think how would you, as a retail investor, actually come to avoid this is ironically is easily like what we said earlier about diversification. And more of these scams, right? Okay, more and more of these scams, right? Because they happen so often, what saddens me is that people they just want to find good ideas and good stocks and follow hot stocks. But for me, I love studying scams or this kind of schemes is because I train my muscle memory to remember what were the red flags. Am I making sense to you, Louis?
Yeah. So what are the red flags that you would highlight for Luckin?
Crazy sales growth, crazy high margin. So let's just say there were a few listed companies in Malaysia, which we shall not name. Same thing. They had crazy revenue growth, increasing gross and net margins every year on a steady pace. Whereas all the other peers was going through a bad cycle. It's like, can you imagine if okay, let's use a toys example. Let's say Toys R Us is doing very bad. Okay, in other places around the world they're bankrupt already, right?
Yeah.
So Toys R Us in Malaysia, they're still very healthy, still can sell toys, but Toys R Us is doing very bad. Let's say, and then another listed maybe let's call it company A started to sell toys, and all of a sudden they grow themselves like crazy. Okay, so then you start asking yourself, does this new player, this new entrant, they do something special that the rest cannot do? Okay, maybe 1 year, 2 years, okay, but economy is always like that one. The guy who makes good margin, whatever, competitors will come in, margins will come down, it will normalize, right? But this guy continuously, year 4 year, 5 years, 6 years, 7, continuously, wow, margin still growing, whatever. And then is it something special that their peers are not doing? Because in Luckin Coffee's case, it's coffee. You got Starbucks, world's largest brand. They have their own brew, proper supply chain, very institutionalized supply chain. Market's not confined just to China. And here they are, right? This new entrant, like beating all the numbers of Starbucks. So that's why when you do peer comparison, right? These kind of things will likely pop up already.
Yeah, but I think one of the reasons why people tended to believe that narrative was how much the strategy, the special strategy, was covered in PR campaigns. So I think the smart thing that they did was like they started to sell this story where, you know, this is their secret sauce, and then obviously potential investors would read those stories and like, oh, Luckin has unlocked the secret to growth. Yes. And I'll admit that I believed it.
Yeah.
Because it was covered in major publications.
Correct. Fortune and all that. All the major publications.
Like continuously. I think it was a campaign that went on for quite some years, you know. So they were like, oh, you know, they would start to say, oh, what makes us different is this. It can sound convincing if you don't know the numbers, right? And then as you mentioned, like these short sellers had to pay someone to sit there, collect the receipt. Who's gonna have time for that?
Exactly.
And what if they didn't do that? Then what would happen, right? Nobody would know if it was like inflated numbers, right?
Correct. And actually that's why I have after coming into this market, after understanding the role of short sellers and what they need to do, I have newfound respect for short sellers. Actually, a lot of people hate short sellers. Even some regulators, they hate. Oh, they said they're sucking off blood of other people. I said, no. The short sellers is what keeps the market healthy. Because there's no incentive for you to actually short a stock unless you think you can make money. And the work that they do is double the hard. So actually, the legend for short selling is this guy called Jim Chanos. He was the guy that shorted Enron, made money from Enron. Yeah. So if you go... Every short seller worth his salt look to Jim Chanos as like the father, the godfather of short selling, right? And he was actually featured in the China Hustle, actually. Yeah.
I think that is also like what I forgot what's his name, the subprime market one.
Oh, you mean the Big Short, is it?
Yeah, correct.
The Big Short, the three guys. Yeah, the name just left me. Michael Burry.
Yeah.
Dr. Michael Burry. Yes.
Well, it was interesting because here's this guy who actually doesn't socialize much. He's just like doing things, introverted, you know, just looking at things at his room, you know. And then he goes to these banks to like buy all these positions, and everyone thinks he's crazy.
They had to create the instrument for him, Louis, because the instrument didn't exist.
Yeah.
They had to create this special contract for him. And they were, after the market imploded, actually they tried to short-change him some more, you know. Because they were losing. They were losing money.
Yeah. They were so confident that they wouldn't, but they did, right? So
correct.
I think what I mean to on that point, like them, you know, keeping the market healthy, I think that's true because, you know, on one hand, you have all these financiers, banks, and, you know, all these financial institutions who are out there to exploit every single loophole.
Correct.
Right.
That's
to make money. Right. So if you understand the psychology behind that, and then what happens that you can make quite a bit of money. So short sellers isn't for the faint-hearted or the
isn't for the faint-hearted. Yeah. I mean, look at GameStop. I mean, we're not going to discuss it today, but look at, if you're interested, there's also a series on Netflix about the GameStop saga, and you can understand the short squeeze better. These guys had to pull the positions, Melvin Capital and all that. They had such a big position on GameStop that they had to cover their positions, and they took a huge loss. But again, you have to respect the short sellers because the work that they do really uncovers or unearths a lot of these scandals. There must be an incentive. If there's no incentive, I'm sorry, we're humans, okay? There's no such thing as philanthropy that is sustainable.
So for these like public market scams, or like Wirecard, Lucky, we can't really do much about them. So just make sure to
diversify,
right?
level up your skill to like what sounds too good to be true. Upskill yourself to identify what is too good to be true. Actually, there's one more I forgot. We should have put it in. She's already in jail, by the way. Elizabeth Holmes, Toronto.
Oh, right. But it was not public listed, right? Theranos?
Yeah, but it was very public profile, because you know who they had as the a board of directors. They had former Secretary of States for the US government. They had big time board of directors and all that kind, and they were promising things that were, hey, she was on the cover for Fortune, can you imagine? I bought into it.
I bought into it. I mean, I'm sure everyone bought into it except
I bought into the story,
the journalists.
Yeah. Except for the journalist that is always, and again, journalists, they're trained to be pessimists, especially the good ones. They're trained to be pessimists, and that's where you really unearth the truth, in a way.
Very true. I think in this case, probably, John, if we were to suspect fraud, maybe what we should do is to just try it out ourselves, right?
Yeah.
Like in the case of Luckin, sit there. Any place, right? Just sit there. But I think for Theranos, if you had just taken 10 different blood tests, right?
You would have picked it up already, especially if you
correct.
have some medical background.
Right, yeah.
And it was very readily available in CVS. If you go to CVS or the drugstores that carried the Theranos service, and if you had some medical background, it would have been quite easy for you to pick up that this is, hey, what they promise is not true.
Yeah. True. So with stocks and stuff like that, make sure to diversify. Okay, so now let's switch our attention to other scams that like doesn't look like scams, but are also things that maybe you should consider properly before ever putting your money in, because they can be sold as legit. It's not like you will lose all your money per se in the case of Ponzi schemes or these fraud scandals, but they can also cost you a lot of money in one way or another.
Correct. These are, how would I say, gray areas where it is a perfectly legitimate product, perfectly legal, fully sanctioned by whatever authority in Malaysia would be Securities Commission or whatever. Then they cannot be called a scam, because these are like fully legalized products or whatever. But the mechanism actually is not well understood, and it's actually sold as if I wouldn't like to use this word, but probably sometimes it's called mis-selling, for the lack of a better word.
Okay.
Yeah, mis-selling, because some of these products, the math behind them is so confusing that I would say 80% to 90% of people don't understand it, and they only look at the final figure.
Yeah.
But the mechanics behind it that will derive that figure is actually not a promise. They will tell you, oh, it's not guaranteed, whatever, but the illustration or the projection of the numbers look so good that it's actually enticing for the guys to actually buy into it. Now, it's actually a very gray area, and that's why it's very opinionated, so I'd rather not go too deep into it. But what I would say is this, Louis. Whenever you promise a very high return after 20, 30 years, for you as a consumer or a product buyer, please understand how to calculate time value money, TVM. A lot of people look at absolute figures. That means you put in 10K today, and then you get like 100K at the end of the day. Okay, but if you put in 10K today, but I get 100K 100 years from now, it's still an absolute return of 10 times. But in terms of time value money or compounding return, it's actually very, very low.
Correct.
Yeah, and a lot of people, sad to say, don't understand the concept of time value money. And I think that's where, if you understand these products that are highly regulated and all that kind of thing, you know how to differentiate that, hey, is this actually a good thing for my money? Even though they are legitimate legal products. Making sense to you, Louis?
Yeah, I think for me, right, okay, like products that I have to wait at least 10 years before I can withdraw any money, or have the risk of like losing some money in between.
Yes.
Scares me because some years ago, I think it was like maybe 10 years ago, I saw this Facebook post about this lady, young lady. So she was saying that her dad put like this into some funds that was supposed to pay for her college. And I think he put in like 10K, which was supposed to be worth 50K by the time that he was wanted to withdraw, you know. And then the company that sold him this product actually denied him any money.
Wow.
Completely zero, you know.
Wow.
Because they said that this fund, right, apparently defaulted already. I don't know how that happens.
I mean, is it regulated by SC?
It's a very well-known company. I can't name the name.
Wow.
It's very, very well-known, and it's like a company that you trust, you know. And then this letter just comes in and say, okay, we're sorry, we can't give you this. I think they maybe paid them the principal, maybe, but not the 50K. Imagine like putting like 10K for 30 years, right? Like what you mentioned, time value money, and only getting 10K after that. So it's not gonna pay for her college, right? It's not enough, obviously. So she was arguing this case, no matter what she did, she couldn't, because obviously the person who designed and structured this product knew what they were doing, and they could protect themselves in the case where they refuse you the gains.
Wow.
So to me, right, that was the first time I saw that, and then I'm like, okay, you know what? I'm just gonna avoid every scheme that tells me this, like, I can only take it out 20 years later, 30 years later. I don't know if the money is there, right? I don't know. I really don't know, because it's not like EPF or it's different, right? So these are like private companies. I mean public companies, but like not government. So it's like it scared me to like totally just avoid this product. So just even without considering the opportunity cost, I feel like there is a risk of that happening, simply because it is a product that's not really regulated in a way like fixed deposits, savings. You can create any kind of product like that, you know.
That's right. And it doesn't help that a lot of these projection tables or a lot of these future promises, right? They do it in such a way, if you don't really sit down and do the math, it actually gets really over your head. That's what I've seen I would say 99.9% out of the time now. It is never a simple, straightforward calculation, because one, again, it's sometimes what they do is they tell you put in some money, and then there's periodic payments, and then there's periodic payouts, right? So for you to be able to compute that, you really have to go down into an Excel spreadsheet and start calculating, you know. If you get what I mean?
How are you gonna do that, right?
Yeah, so how are you gonna do that?
You're just gonna trust whatever, and then there's like always a lot of fine print below that.
Yes.
So there's like this one guy who came in to want to sell my sister this product. Okay, like if you put 10K in, it will be like, I forgot how 30K within 10 years or something.
Okay.
Yeah. And then like below so much fine print, you know. And I only ask him one question. I'm like, can you guarantee that this fund will be there in 10 years? And he says there's a risk for everything. No simple yes. No simple yes.
Yeah.
So imagine like having so little liquidity and having your funds locked up for 10 years straight, you know.
Correct.
Crazy. It's crazy to me. The idea of it is crazy. And if I would had to lock up my funds like that, I should get more returns, right? Don't you think, John?
Actually, that is so spot on, and I want to add to that. The best investments, the kind of assets or whatever, you must have control of. Even in a business, you must have control of an exit. If you do not have control of the exit, right, the demand, you should actually demand for a higher rate of return, because there's so much risk, default, liquidity, whatever lah. You cannot get it out. That's why stocks, right? People keep on thinking that stocks is dangerous because the prices move up and down. But you have to think of one thing. Any day the market is open, one click you can get out.
Yeah. The liquidity itself is like priceless, you know. It's so much more.
Yes.
So much more.
Yeah.
I mean, the options, like years ago, I forgot who I learned it from, like an investor, I guess. Options is like what is valuable here.
Correct.
If you don't have the option, and you only have like, let's say, one option, that's not an option. Okay, so there's only one way to do it. That's not an option. So you have no choice but to wait 10 years. Otherwise, if you withdraw in between, right, let's say you put 10K, if you withdraw in between, you will get
Yeah.
less than 10K.
Correct.
It's crazy to me, like
Yes.
imagine like, okay, 10 years maturity, right? Then if I withdraw at year 9, I'll still get less than 10K.
It's crazy, right?
It's crazy. So
it's literally you're giving money to other people to roll. You know?
So okay, so within that time, right, 10K could them you could have already like returned that 100K by the time year 9 comes along, and then suddenly if I withdraw at year 9, somehow I cannot get whatever is accrued up to that point.
Yeah,
it doesn't make sense to me. It's just like I feel like, yes, in a way I would feel scammed.
Yeah.
If I put my money in, I would personally feel very bad about myself. Yeah.
I'm just treading water to think whether I should share this story because it's quite sad. There was one of my clients, an agent approached him. I won't name the company, very big company also. And they said that, oh, this is a very, very good product, very good plan because it was only reserved for staff. And now we're opening up to the public.
Wow.
You look at the narrative again, huh?
There you go.
The narrative again, huh? Okay. So you see, there's a time sensitivity. Oh, you better get it before it runs out, and wow, it wasn't my client actually put in close to 100K. Yeah. It's not a scam. Don't get me wrong. It's not a scam. But again, like what we're trying to point out, time value money is opportunity. Opportunity cost, right? And the more complicated, the less liquid, the less availability for exit. That's when you have to reassess people because people don't think in those kind of terms. Yeah.
It's just right now the opportunity presents yourself and it sounds urgent, like the case where my sister was being sold. They were like, okay, if you want to make sure you get, I think they were giving out a free iPad.
Oh, it's already
if you want
packed into the cost already.
Correct.
So I'll give you free lunch. All these are actually packed into the cost of marketing already. Actually.
So they're like, oh, if you don't like sign up within the next 3 days, you can't get this free iPad. Think about that. So is that urgency, and then this person being right in front of you?
Yeah.
Right?
Convenience, frictionless. Yeah.
Pressure, right? So
yeah.
Some years later, you might think back, why did I do that?
Yeah.
Now I need the money now. How to withdraw?
Correct.
Right?
Correct.
Okay, I think we have talked about a lot of scams.
Yes.
Already. So first one was the Ponzi schemes, right? So these are the most common ones, starting with the Bernie Madoff. I really enjoyed that discussion. I mean, personally, I have so much experience dealing with Ponzi scheme because we lost so much money gets lost in Ponzi schemes.
Yes.
And especially those like, I know a lot of people who lost all their savings in Ponzi schemes. Yeah. It's very, very sad.
Yeah. I think how we want to kind of sharpen and conclude this episode, Louis. Maybe you can take us through what are the things that these are the red flags, very common tactics, strategies of what an investment scam will look like. Perhaps you could take us through that.
Yeah. So I think for me, right, whenever a scheme comes to you, you should be careful. Someone comes to you, right? Like we all know the random friend who messages you, or the person who randomly adds you on Facebook, right? These are things like red flags.
Yep.
If an investment comes to you, that's usually already 50% a scam, right? 50%. Why?
Yeah.
Why is the investment coming to you, right? It's because they are somewhat being paid a referral fee.
Yes.
Okay. So I'm not saying like, okay, you're just sitting down in a coffee shop and you're just sharing ideas. No, but like literally pushy, like they're pushing you to tell you that, you know what, this is a great opportunity. It's only going to be open for this long
period of time. Yeah.
Okay, so they come to you in a very aggressive way to sell you this thing, but the time for you to consider whether you want to invest or not is like short. Right, so I would say if it fulfills that criteria, it's 50% a scam.
Yeah.
And then if they tell you, okay, you can get consistent returns.
Yeah.
Right. So even if it's 1% a month,
But
1%.
compound is 12, more than 12% a year. You
More
know,
than 12%.
it's not 12 times 1, you know, because it's 1 compound 1.1 and then 1.1112, you know, that kind of thing. So it's actually more than 12% a year. I think that is actually a very big red flag. Consistent high returns.
Correct. So if it's consistently high, right? Okay, 1%, 1% or 0.1%, even like some consistent amount. Or sometimes they'll give you cash 100 every single month. 75% a scam. Okay, so if you have these two, you shouldn't invest already.
Yes.
This combination itself is like should stop you already. Because there's no such thing as a free lunch. Basically. So if you do still invest while knowing these, right, you have to get your greed in check. Greed and maybe like a sense of self-superiority.
Correct.
So, you know, like I'm very sure I'm the selected one for this. Like, you are falling into that exact ideal persona that these scammers are interested to scam the persons. So beyond that, right, are just bonus points okay. So very common characteristics of scammy things are like the lack of liquidity. That's a very, very big one. So no matter what scam it is, usually they will make it very hard for you to withdraw money.
Correct.
Whether very quickly or soon after that.
That's right.
Yeah. So usually they'll let you withdraw for first few months or up to even like 1 year. Then after that, once you start depositing larger and larger amounts, then you know they'll say, okay, you can only withdraw how much a month or a day. They'll stop that.
Correct.
You know? Yeah. So that is telling you that okay, they are trying to control the outflow of the money, right? To even if you do it like literally, there are scams where even if you could withdraw 1,000 and then you will still like end up losing money because they're like once they start to tighten it like that, right? They're leaving. They're gonna take that little bit and go.
Actually, there's a technique for schemes like this. There's a name for the technique of schemes like this. It's called pig slaughtering.
Oh, pig slaughtering. Okay.
So what they do is they will let you have some of these crazy returns for the first few months. And then the greed will kick in. So initially you say, I put money that I can burn 1K, 2K. Then the moment you start seeing the results coming in, right? That's when you put in the big money, and that's where everything goes. I'd just like to add also, Louis, one more thing that you should be aware of is this. Whenever you deposit money into any of these schemes, right? It has to be a registered entity or a listed entity or a similar account consistently. Now, a lot of these scams, when you bank in money, one day it will be this account, then the other day will be another account, the third day will be a different account. So there's also a very easy flag for you to witness because they need to detect. Because you see, the moment it's in one account, the authorities want to clamp you very easy already. You clamp, that's it, you stop already. But these kind of scams, right, they need to move from account to account. So the moment you start depositing money and they ask you to deposit into names or account numbers that are not consistent, let's say you invested in investment scheme A or investment scheme B, right? And then there is a company name. And then you bank in, it's to an individual or to a name that is like, that is also a very easy indicator for you to know that it's a scam already.
Well, I didn't know that. I guess I just never involved myself so deeply that I could like change the accounts. But yeah, I think that makes sense. If you're already like knee deep and you want to get out, right? That's one.
Yeah, maybe you already have like 20K in there, and then they want you to bank in another 100K, right? And then the account, how come different? How come the first time you deposit 1,000 is different?
Yeah,
and then,
they'll give you a bunch of excuses why, you know.
Yes,
like, legal reasons, or because like they'll make it someone else's fault.
Yes.
Exactly. Hates us, blah 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 is trying to do something to us. Oh, because this is opportunity too good, so people are clamping down on jealous competitors.
Jealous company, all this kind of thing. Hey, you know, to deposit take in Malaysia, right? Without a license, it's actually illegal. You know, you can actually go to jail. Yes, that's why money lending license is so valuable. That's why all payments, whatsoever, for you to deposit take is very regulated by SC and Bank Negara one. So if you go into a company and it's like deposit taking for whatever investment scheme, it's 99.999% illegal if it's not, it's 100% illegal if it's not sanctioned by Bank Negara or SC. Yeah.
Makes sense. Okay, so I think we've covered all the red flags you should look out for. Also, like, I just want to add one more, which is like, don't believe it just because someone famous or someone like
Yes.
well known is behind it. This is a
Yes.
big one because scammers know that you want to see some known face there. They will put this person in there. They just pay an endorsement fee usually. Doesn't mean that they are invested. So that's also something you should watch out for.
Yeah.
Okay.
Good
So
one.
just to wrap up this episode, thank you guys so much for watching today's episode. We have enjoyed discussing scams. It's something that as I implied earlier in the introduction, it's one of the easiest ways to lose a lot of money. Personally, I've seen a lot of people lose 6, 7, 8 figures to scams, money that sometimes they did not have. They borrowed money, or like they even involve their close friends and family into it, and then they end up losing that friendship along with the money.
Correct.
Okay, so hopefully by us discussing some of these with you today, you can avoid them and then keep your money safe. There are many other investing vehicles out there that can actually give you real returns, and it's actually one of the things that we discuss in our channel. Okay, so if you want real investing strategies and other financial tips, then make sure to subscribe to our channel. And if you like this video, give it a like. Thank you so much, and see you guys again in the next episode. Bye-bye.